In this video, I'll share 6 mistakes that new investors make. Hi, everyone. Welcome back to the Greatness Everyday YouTube channel, where I make videos that challenge you to upgrade your mindset, your money, and more. So to find out when those videos come out, please go down, hit the subscribe button, and tap the bell to get notified when they do. Today's video topic is one that I'm really excited about because I have been in your shoes before. If you are a new investor, or maybe you're someone that has been investing just a little bit and you're not having the success that you want, well, this video is going to give you 6 things to look out for. 6 mistakes that I typically see in people making as they are becoming or just getting into investing. Or maybe you've been into investing for a while now, but you haven't had that success that you want and you think you deserve. Well, these are 6 solid things that you need to consider and be aware of, and really look and assess yourself if you're doing these things or not. So we're going to get started with number 1. And number 1 is not having a goal. So by that, I mean, let's say your goal is to grow your investment account to $50,000, right? That for some people watching this video might be small. For some people, it might be way larger than they ever think they could accomplish it. But the reality is, through investing and through having a goal, it's definitely possible. That is such a small number when you actually think about it. Take that from my personal experience. At one time, I used to think that investing was something that I really couldn't afford to do, or I couldn't work that into what I was trying to do with my money. But the reality is I can't afford not to do it. More on that later. But when it comes to having a goal, if I want to grow my investing account to $50,000, it's really important to have that goal because it gives me a way to actually determine whether or not I've met my goal in the end. Right. So if I'm just kind of investing some money here and there and I don't really have a goal, well, I'm not going to be able to say, yes, I've achieved it. I'm not going to have something that I'm working towards, or I have a vision of what I want to accomplish. So that's really important. So in the end, when you get to your goal, you can actually say, yes, I achieved it. So that's point number 1. Number 2 here is not making a plan. So now that you've had your goal, right? $50,000, $100,000, $1 million, $10 million investment portfolio. It doesn't matter what it is. These things I'm going to give you work for any goal that you're going to have, any dream that you're going to go ahead and create in your life, right? So that's the first one. And the second one, like I said here, is not making a plan. So you've identified that goal of growing your investment portfolio, but then how are you actually going to achieve it? Right? That goal piece is nice. That dream is nice. But if you don't actually have a plan to understanding how you're going to make that happen, well, it's not going to. It's not going to come to fruition. You might want to have that goal account of having an investment account of $100,000, $50,000, whatever it is, but you're not going to achieve it if you don't have a plan. And for some people, that plan could be something that in their state of life, in the season that they're in the situation they find themselves in, they could only be able to afford investing, let's say $100 a month, but at least you have a plan. From there, you can think about how long it's going to take you. From there, you can determine what you're going to do. Are you going to invest it into an ETF? Are you going to invest it into an individual company that you really like and believe in? Or are you going to go ahead and invest it into something like cryptocurrency? Are you going to invest it in something like real estate or something else, right? So you need to make that plan that's going to help you identify how you can achieve the goal that you have. And number 3 here is you don't do enough research. And by that, I mean you're using your money irresponsibly. You're taking your money, you've identified what your goal is, you've then made your plan, right? But then when you make that plan, you're not following through and making quality decisions. And that's really where the research piece comes into it. When you research a company, when you research an investment that you're going to make, you want to look at a lot of different things, right? I just don't go into picking stocks and I put it on like a roulette board and I just spin it and boom, there you go. I'm just going to take whatever stock it falls on. Right? Maybe that's how you invest, but maybe that's why you've probably not been super successful, or maybe that's why you've been crazy successful, but you can't repeatedly do that day in, day out, year after year. That's what we're here for. We're looking at solid things that you need to do to become a long-term investor. So when you don't do your research, like looking at who's running your company that you want to invest in, who is going ahead and making the decisions, right? Historically, have they made good decisions? Have they made bad decisions? What is the actual price right now? What is a good buying price for you? What is a good selling price? Coming up with those things and doing your research. How has that sector or industry performed in the past? Or what is the future outlook? Because really the past doesn't matter. What is the future outlook in the next 1, 3, 5, 10 years for that company or for that sector or the industry that they're in? Those are important things to consider, and you need to do your research. And the fourth thing is not diversifying. And by that, I mean you're going all in on one or two or maybe too few stocks. What diversification is the ability to spread out the investments that you make. So maybe, like I said, I kind of view investments that I really go into in a few different asset classes. I look at stocks, obviously, individual companies. I look at ETFs, buying like a basket of multiple companies in multiple different sectors. I look at cryptocurrency because crypto has been a space that has been extremely good for me. And it's something that I think a lot of people should consider depending on their investment style and their investment goals. More on that in some of the other videos I have specifically on investing in cryptocurrency. And then from there, one I'm looking at getting into, but I've seen how good it can be for people, is investing in real estate. So by that, that's 4 sectors or 4 different types of investments that I'm looking at. And I have 3 of them. I'm looking at adding a 4th one here. Is really important to determining how to protect your money and diversify the investments that you have. Because when you're going ahead and doing that, you're really making sure that your money is being used responsibly, right? Some people would view going all in as one stock. That whole risk to reward ratio, the reward is really, really high, but the risk is really high as well. If that one stock is going to fall down and crash down to 0, right? Then you lose all your money, right? There's different strategies that you should do by doing your research. And then from there, not diversifying enough, depending on what your level of risk is a really big mistake I see a lot of people make. Number 5 is letting their emotions control their investments. Emotional investing, if you're going to do that right now, you may as well stop investing. You may as well just keep your money in a savings account, which I don't think is a solid thing that the majority of people should do, right? But you may as well just keep your money because you're going to use it so much better if your emotions control the investments that you make. I really believe that emotions and investing do not go together at all, because I have heard from countless people and experienced it myself that when I see my investments, at one time, this was kind of my thinking, it's not anymore, but at one time, when I see the investments that I make, let's say I put $5,000 into a stock, right? And then it goes down 50%. Well, my investment's down to $2,500 now, right? If you're putting $50,000 into one stock in particular, you're going to go down to $25,000. That's a huge amount of money for some people. That's more than some people make in a year, or maybe depending on where you live, in an entire lifetime when you actually think about that. So the ability to separate your emotions from your investments is key. I'm at the place now where, as I've developed the principles that I have for my investing mindset and my investing success, what happens there is really, I've seen my portfolio, depending on, let's say, cryptocurrency a few years ago, I've seen it dip down at certain times when I was just buying and holding certain crypto assets that would dip down 60, 70, 80%. And I was perfectly okay with that. But if you're one person that's going to not be okay with that because you don't believe in the long-term potential and all you can focus on is the value of your portfolio at that exact second, it's not going to be good for you. It's not going to be healthy, number one. But then on top of that as well, just financially, that might not be a good decision for you. So you've got to be able to learn how to separate your emotions from the investments that you make. And by doing these things that we're talking about in this video not to do, right? By doing those things, you're going to make sure that you really have that solid investing plan figured out anyway. And number 6 is the opposite of what you should do, is you buy high and you sell the investments low, right? So those are tied in to kind of the last 2 pieces and principles there for a few different reasons. Because if you buy high and you sell low, well, you're losing money. And that's really what we don't want and expect when we make an investment, right? So there could be many different reasons for selling low. Maybe you just need the money. Well, that goes back to your financial planning. When you make that investing plan that you have, you shouldn't be investing money that you can't afford to invest and hold for 3, 5, 10 years or more. Right. That's a firm belief that I have. You should only be investing in money and having a plan to invest the money that you have that you can actually invest, right? So that's one piece to it. Or maybe things like a stock market crash dips down. I know people that when a stock market crash has happened or a recession has happened, right, they have sold because they look at the value of their portfolio at its bottom, at its lowest moment. And they've gone ahead and sold their investments and they've lost 30, 40, $50,000 just like that. And if they had just held it from then until now, well, that would be worth so much more when you actually consider it. So really making sure that you're doing the opposite and you're buying low and selling high is what we want to see when it comes to your investments. And these are the mistakes that new investors typically make, but it doesn't just have to be new investors. It could be new, intermediate, people that have made investments for a long time, and maybe they're just not having the success that they really think that they should. Well, these are the things not to do. That's not what this video's main purpose is. The main purpose is for you to look at these things and say, I don't want to do these things, so I need to do the opposite. So what I've done is I've created my course, as I've shared before, the 6 principles of successful investing. I'm teaching you how to do the opposite of these 6 things here in this video so that you can really develop and maintain and see the results of successful investing over a long term. So there's 6 principles. You can click the link in our description down below or the comment section. You can check that course out. It's a program that I've created. I put a lot of time and energy and really a lot of focus into making something that's going to help people learn how to become a successful investor, regardless of what goal you have, using the 6 principles that I've used to have a lot of investing success over the past few years. So go check that out. Let me know what you think of this video by clicking the thumbs up button if it helped you, and dropping any comments or questions that you have down in the section below. If you want to find out when new videos come out that challenge you to upgrade your mindset, your money, and more, you can go down and click the subscribe button. Thanks for watching this video. Remember, choose greatness every day, and I'll see you next time.